So I think at this point in time, it's safe for us to assume that Trump has a pretty bold vision for the country, particularly economically. In order for his economic plans to come to life, he needs a little bit of assistance from the banking sector. That means he needs a real unleashing of lending from the banking sector in particular. One financial institution is liking that tonality, so much so that it's reviving a product that it completely scrapped almost 5 years ago during COVID that targets the equity in your home. I'm gonna tell you who this financial institution is. I'm gonna let you know what that product is, how it works, how to qualify for it if it fits for you, and how to use it effectively to make sure that it benefits you financially and doesn't hurt you financially. I'm JP. This is Blueprint for Prosperity Network. I'm a career financial services professional, a retail banker by trade, licensed across the industry in multiple different sectors, including mortgage lending, FINRA investment license, small business certified, life insurance license. And I've been in the industry for over 10 years at the time of this recording. The goal of the content is to help you master relationship banking and to increase and maximize your borrowing capacity so you can customize your personal blueprint for prosperity. So that having been said, the financial institution that is joining this effort to increase lending in the country and tap into the equity of your home is Chase Bank. Chase Bank is relaunching its home equity line of credit. Completely scrapped this product in 2020 during the COVID crisis. It had been no rumors or whispers of this product coming back out, and it's actually coming out right around the release of this videos, which is basically late March, early April, where they intend to roll back out their home equity line of credit. And this product is gonna be pretty interested in the marketplace. I'm gonna get you the details of this product, a little bit of insight on what you'll probably need to qualify for it. And I'm also gonna give you some insight on how it can fit into your financial plan if you own a home and have decent equity. But I wanna give you a little bit of context into this before we get into that information. The first thing to understand is, at the end of the day, banks are in it to win it when it comes to profits. They're looking to lend to increase their profits and their bottom line. Trump's economic plans completely fall victim to the need and the necessity of lending and money flowing in the system. He needs lower rates and he needs banks lending at a higher capacity. So with that being the case, he plans to deregulate. He plans to get interest rates as low as he can control them to be. And he also plans to find other ways to spur lending in the financial system. This kind of rhetoric hasn't been on the table during the last administration. The entire time that Biden was in office, which was the bulk of the COVID crisis, financial institutions have been constrained in their ability to lend. Their restrictions on underwriting have increased, and they've been basically at a standstill and stalemate in some cases when it comes to various forms of lending. When you start talking about residential real estate, this has also been the case to some extent. Transactional activity has plummeted in residential real estate since interest rates have increased in the last couple of years or so. And Chase Bank in particular completely scrapped one of its more prominent lending products, which was its home equity line of credit. And it had no whispers of coming back around anytime soon. Out of the blue, it seems as if they found the confidence or the marketplace or the conditions to relaunch this product. So with that being the case, the home equity line of credit is essentially a product that is an alternative to a refinance, or at least a cash out refinance. This is gonna allow you to tap the equity in your home, which on certain terms that could be favorable, allowing you to complete other financial transactions that can advance your finances or improve the quality of your home, etc. So the details of this product, first off, this is a product that is intended to be for primary or secondary residences. This could include single family residences, detached planned unit development, 2 to 4 unit homes as well. This Chase HELOC can be a first or second lien. That basically means you can have a paid off property, or you could have an existing mortgage in place and it can fall as a secondary lien on your property. Now, if your property is paid off, it is important for you to know you'll likely need to make sure you have insurance on that property. I know a lot of times people pay off their properties and they will scrap either like a flood insurance or certain levels of insurance on a property to cheapen the cost of owning that home. Well, if you're gonna be putting a lien back on that property, you're gonna have to have insurance in place. So that's just a quick keynote. The line size is gonna be from $25,000 to $400,000. So that basically means that the bare minimum that you can borrow on this line has to be $25,000. That means you have to have enough equity in there to be able to get $25,000 or up to $400,000 in equity. So the next thing is the draw period. The draw period on this product is gonna be 3 years, which is kind of short to be honest. It's pretty typical to see somewhere between 5 and 10 year windows on your draw period. And for those of you who may not be familiar, your draw period is going to be the window of time on that line of credit that you can pay off, draw and pay off and draw and pay off and draw. You can repeatedly rinse and reuse this product like a credit card. So that's called a draw period. Your ability to be able to draw funds, pay that money back, and draw those funds again. It's only 3 years for Chase Bank's home equity line of credit. The repayment period breaks out to this: 30-year term, 10-year interest-only payments, followed by a 20-year amortization period. To put that in plain English, the total loan repayment period is 30 years. The first 10 years is flexible interest-only payments. That basically means you do not have a fixed amortized principal and interest payment. You have an interest-only payment, meaning that you only have to pretty much pay the interest on that loan at that time, or that line at that time. This can be great for cash flow purposes because during that period of time, you're only making interest payments, which is usually less than the total amortized payment of principal and interest together would normally cost you. So this is where sometimes real estate investors love lines of credit because they can sometimes borrow significant amounts of money from maybe a primary residence or another residence that they have and use that money to buy a piece of real estate, a rental property, and they can make the payments of interest only on that debt while still getting maximum level of cash flow on that rental income. Just to give you a scenario, the remaining 20 years of that 30 is a fully amortized principal and interest fixed payment. So hopefully that makes sense. The next detail is going to be the origination fee, which they're stating at the time of this recording, 4.99% of that line amount, capped at $1,995. The last thing I want to note on here is the LTV for you to qualify for this loan, or the maximum spread they're going to give is 85% loan to value. What that basically means, in case you're new to that as well, is that if your property is worth $100,000 in equity or has $100,000 in equity, they're only going to be willing to lend you a line of credit up to $85,000 of that $100,000. That's the maximum exposure they're willing to have. That, on the flip side, is actually pretty high. But Chase Bank, which is known to be extremely conservative for its various forms of lending, 75 to 80% is pretty common for lines of credit. Chase Bank willing to do 85% is kind of impressive and a little abnormal. But that's inverse to them saying that the draw period is only 3 years when it's normally sometimes 5, 7, or even 10 years out with other financial institutions. So that's the specs on this product. As you can see, pretty flexible product. It's a great alternative to a cash out refinance if you have an existing mortgage on your property that is at a great COVID-like interest rate. What I mean by that is during COVID, interest rates were as low as 2.5%, 3.5%, 4, or under 4% was very common to attain. So there's tons of mortgages out there that some of you may have that the interest rate is under 5%, under 4%, something that we may not see anytime soon and potentially never see again. And so you don't want to lose that interest rate for the life of owning that home, or the life of that mortgage at least. This home equity line of credit will allow you to put a second lien on the property, still tap the equity that you may have accrued during your time of home ownership without disturbing that phenomenal rate on your primary residence, on your primary mortgage on your residence, rather. So this is a great alternative to a cash out refinance. Another benefit and another, valuable way to look at this product is it can help you pay off other expensive debt. So think about maybe like student loans if you want to get those out of the way. Credit card debt is a huge one. Personal loan debt, hell, depending on the circumstances, maybe even auto loan debt. This can be a great alternative because usually home equity lines of credit have moderately decent interest rates, meaning that they're not too far away from standard mortgage interest rates. They are a little bit higher, but typically speaking, they're not usually that much higher. So they're going to be more attractive than a double-digit auto loan rate, a double-digit student loan rate, and definitely double-digit variable APRs on credit card debt if you're stuck in that. So this could be a wonderful opportunity for you to draw that money out and pay down. Another thing for you to consider is this is a great product for you to invest effectively and sensibly, of course, because you are using debt. But buying another property, buying some land, this could be a phenomenal opportunity for you to get access on some hard-earned equity that you already built in your property and turn around and turn that into some kind of cash flow or appreciating asset, maybe even inject it into your business. This is really responsible debt to take out to start, launch, or grow your business. So there's some great opportunities with this home equity line of credit. Again, the lending industry is likely going to bloom into life if President Trump and even honestly the Federal Reserve gets their way over the next couple coming months and couple years out. If they're able to do what they want to do in a monetary and fiscal policies and other factors that are at play, deregulation, etc., this is going to lead to more financial products, more lending products, more creativity in the lending market, because essentially this is where economic growth happens in our economy. And this is just another prime example, a product that was completely scrapped. Chase didn't want anything to do with it. They were too conservative, too concerned. The environment wasn't right. The conditions weren't right. Now they feel like it's time to roll this product back out. You also have to keep in mind, as I wrap this up, home equity in the United States is at an all-time high. More people are sitting on equity in this country than they've ever had before. And that's partly due to the fact of the massive run-up in home values over the last couple of years right after COVID. And some people have owned their homes longer than that and just been paying down on them responsibly. In either case, there's a ton of equity in the United States residential home market. And banks have been salivating on the conditions in the environment, allowing them to jump back into tapping into that. Chase Bank, in particular, that had completely scrapped its home equity line of credit, has now felt the conditions are right to get back in the game. So make sure that you are doing your due diligence. If you plan on exercising this product, comment down below and let me know what your thoughts are on the product. Let me know what your overall perspective on banking and the lending space as things are opening up. Let me know if you own your home, if this is a product that's of interest to you. Have you used home equity lines of credit before in the past? Let me know your thoughts, comments, and questions down below. So to all my pioneers, welcome back. To my new viewers, welcome in. I want each of you to follow me on Instagram. The handles will be somewhere on the screen most likely, and the links will be in the description below. I have launched an Instagram for the channel and a personal Instagram. Let me know you're coming from the channel and I'll let you in on both of them. I want each and every one of you to continue to grow the community of pioneers and the community there on Instagram. We're going to continue to branch out on social media. Make sure you like, comment, share, and subscribe. There's also other ways to support the channel that have finally opened up thanks to your support and finding value in these videos. So continue to support these videos and this overall channel so this channel can continue to support and reinvest back into you. Other than that, as always, I want each and every one of you to stay focused, stay in motion. I'll see y'all soon. This is my blueprint for financial empowerment and self-sufficiency. This is my blueprint for optimal health and body mastery. This is my blueprint for mental, physical, and spiritual momentum. This is my blueprint for prosperity.